We shall be talking about some very important topics. I will start with the second hour, which will be discussing sustainable construction, considering that the construction industry has quite a major impact on the environment. What is the industry doing to ensure that construction is sustainable? And in the first hour, we want to talk about matters microfinance in Kenya, how this industry is growing, the challenges it faces, as well as how to ensure that it achieves its potential. To have this conversation is Laban Hehu. He is the CEO of Jitegemea Credit. Thank you very much for joining us.
Thank you very much.
Karibu sana.
Good.
Could you just paint a picture for us of how the microfinance sector is in Kenya?
Thank you very much. Maybe I want to start by saying that microfinance sector serves mostly the informal sector. And the informal sector, in our case, we have about 15 million Kenyans, or 15 million individuals who are in employment in the informal sector. Therefore, the microfinance sector is a very important sector because it helps in creation of incomes for those that are considered the lower of the pyramid. And I want to say that the challenges are many in the microfinance sector. One of the challenges that we have is lack of funding, the sustainability of the microfinance players. Why this challenge? There has been a lot of lack of funds. They do not have funds because most of them were created as impact funds to do business. But along the way, those that were supporting dropped, and therefore they were left alone. And therefore, they are not able to have the finances to do the business. That is one of the biggest challenges that we have in the microfinance sector. The other thing is that we also serve a sector that is considered very risky sector. The informal sector, people who do not have collateral, but we have to serve them. There are people who do not have records in their business, therefore they do not have credit history, and that is the reason why the commercial banks cannot serve them, and therefore these are challenges that affect the microfinance sector, because you are working with a sector where there is, or rather people who do not have collateral with them to guarantee their loans, and that risk is actually transferred to the microfinance players. They do not have records to prove that they can be creditworthy. And that is, again, the reason why they are not able to be served by commercial banks. But we have to serve them.
Yes.
So these are some of the challenges that we have in the microfinance sector.
Right. I like that you've brought up the issue of the clientele that you're dealing with.
Yes.
They excuse me, they have very unique challenges. And so for the microfinance sector, is there a way to ensure sustainability, because these people still have to access credit, but at the same time, microfinance institutions have to, excuse me, microfinance institutions still have to make a profit. It's a business. So how do you ensure a balance there?
We are able to do a balance. First and foremost, we are able to, how we work with these clients, we incubate them. And by incubation, I mean, we train them, we ensure that they are properly trained, we ensure that they are able to do business properly, so that we can be able to overcome the challenges that they have of not having records and all that. So we ensure that we train them to have records for their businesses. We also ensure that their businesses, we follow up their businesses so that they can be able to do business and do it properly. So we are a sector that work with the client, not just having a business, with them, giving them loans and leaving them out. We ensure that they do business and do it well by training them, by working with them along the way as they do business. Yes.
So when, say, SMEs, they come to you and they are looking for credit, they don't have their record management right.
Yes.
Do you start by training them, or do you give them the money and then you now go to the training? How does this work?
No, when we onboard clients, we start by onboarding them, and then we start training them on how to do business. When we do that, we train them on record keeping. We train them on how to make profit from what they are doing. Yes, that is how we are able to work with them. And then after that, after taking them through, for example, I can give you a live case. In my organization, what we normally do in the first 4 months, or rather 8 weeks, we train these clients, ensuring them that they keep records, they are able to pay their loans, what we normally call loan orientation seminars. We take them through that. And after some times now, when we know that these clients can be able to do business with us, then we give them the first loan. We keep on graduating. We don't give them big loans, small loans. Sometimes we start with 20,000. We see how they are able to pay that. As they continue, they are building records. They pay the first loan, they will repay, and then we give them the second loan, maybe 1.5% of the next loan, maybe 30,000 or 40,000, based on the business need. And then after that, they keep on graduating.
Yes. Most microfinance sectors, at least in the world, they offer higher interest rates than mainstream banks. Yes. Is this the case as well in Kenya? And how does this pan out for you in terms of attracting clientele?
Yes. One of the things I want to inform our viewers is that microfinance as a sector is a very high cost business. Remember, we do not just, our clients come to us. They don't come to us, but we go to them. We go to their businesses. We have employed so many people so that they can go to door to each of the businesses. And therefore, in fact, our margin is usually very small. What we get from the client's loans, income or interest that we charge, and what we use to get that. We normally consider the first loan is just for break even. We don't get anything from the first loan, but we start getting money from the subsequent loans. Yes.
And help me understand this scenario, because there are very many people in this category who are accessing the digital credit, or the mobile money loans. Is the sector not using technology to cut these costs? Because having to go to one person or one business at a time, as you said, is very costly.
Yes.
So what can the sector do to ensure that it uses the available technological solutions to reduce the costs? Yeah.
Thank you very much. Of course, as we continue, things are changing. The way we used to do business in the past is not the way we are doing it. The way we did microfinance in the 90s is not the same way. For example, in the 90s, we used to do a lot of groups. So, where you have groups, and you work with the group to be able to do what we call social collateral, and give them loans while they are in the group. But that is now waning out, because the digital thing has come, and you have to work with the digital. You have to work with the digital trade, because that is a trade that is there. And therefore, in every microfinance, either they have formed what we call a sector for digital and another one for a one-on-one touch with the client, and that debates with the client. The microfinance and the way they want to move their strategy and all that. But the digital is the thing. If you not take that trade, then you'll not be able to make it. Yeah.
And as in your organization, have you included these technological solutions, and have you seen some benefits to it?
Yes, we have adopted that. We are in digital. You can apply a loan, from the point of actually in your house and anywhere, and get the loan immediately. This is something that is happening all over, and we have adopted that. Yes.
Microfinance institutions serve very diverse clientele.
Yes.
There are SMEs across different industries, and how is the product diversification for this sector so that you are meeting every client at their need?
Yeah, we have various products. Number one, remember we are working with very unstructured clients. And so we work with the clients as per their need. For example, if we have the agricultural products, or rather their agricultural clients, we tailor their product according to the needs of the clients in that sector. So we have what we call the agri loans for agricultural clients. We have what we call the SME loans for those that are in the SME, either in the service industry or in the manufacturing industry, depending with what they are doing. So you have to manufacture the products in that manner, depending on the needs of the clients. So we have agriculture loans, we have SME loans, we have education loans that usually most of the times are second loans, because you cannot just have education. You have another SME loan or agriculture loan and an education loan to support education sector. We have maybe asset loans. Maybe a client need an asset either for their home use or either for the business use. So we have products for that line. And we also have other products for socio-oriented activities. For example, the green financing. So we also work on that, and we give products for that so that we can be sure that we are within the green financing activities.
Let's talk about the role of microfinance institutions in increasing savings in Kenya. We know that the savings culture in this country is very low, and there needs to be a lot of sensitization. Are microfinance institutions doing that in terms of sensitizing people on the importance of saving, the importance of, wise investments? Please share your thoughts on that.
Yes, in the microfinance sector, we have what we normally call the deposit-taking microfinance and non-deposit-taking microfinance. The deposit-taking microfinance, they accept deposits, so they accept savings from their clients. And that way, you are able to encourage your clients to save so that they can be able to get even loans at a better rate, because you have a security with you in the bank. But for the credit-only microfinance, we are not allowed to do that. We are not allowed to accept savings. So the only way you can do is to ask them to put savings in their commercial banks, and then we use that as collateral. And therefore, we are able to ask them to do savings in that category.
All right. But are there sensitization programs that you do, just generally, not necessarily looking at them bringing money to your organization or taking from your organizations, but general education programs for the general public?
Yes. In the training that I told you about, the orientation program, when you are onboarding clients, one of the training is on how to save, either through the banks, either through what we call the chama, the merry-go-round, for those who are working with the groups. So they have what we call the merry-go-round savings with them, and they put that money somewhere, either in an account or they save among themselves, so that it can be an extra income for them or an extra loan for them, and that makes them, keep them together because they have something they are doing within the group. So saving is something that is there. For example, for deposit-taking microfinance institution, they have very robust programs to drive what we call the savings and to attract deposits with them.
Mm-hmm. Yeah. Right. So let's look at the regulatory environment. Yes. How would you say the regulatory environment, policies and regulatory framework supports microfinance in Kenya?
Let me say there we have a gap, mm-hmm. and this is something that we have been working on. There is a serious gap. For example, central bank regulates deposit-taking microfinance institutions. Then the non-deposit-taking microfinance, that is the credit-only microfinance, are not regulated by CBK. There has been what we call a Finance Act 2008 that has been pending. It has not been acted on, and we have been pushing to see to it that this is working. This is something that is pending, and we have not been properly regulated. I can say credit on microfinance are not regulated mm-hmm. for now, because there is an act that has not been rolled over.
Mm-hmm.
Yes.
And what is the risk of that unregulation?
The risk is many. There are many risks. As for example, if my institution want to borrow money from any either international organization or even local organization, one of the parameters they will look at is, are you regulated? And when they see that you are not regulated, you are not a deposit taking. If you are deposit taking microfinance, then you are in a good. You are in. They consider that as this is a good institution. But if you are credit only, even if you are doing a good business, then there will always a risk with them. They will look at it and see this is risky. This is a risky business, and therefore that is one of the challenge that we are having of not being regulated and regulated well. Mm-hmm. So we have been agitating that, and one of the things that AMFI is doing, the Association for Microfinance Institution, mm-hmm. is to advocate for these prayers, working with the government, working with the CBK, working with the government agencies to see to it that the Microfinance Act that has not been operational is now working. And we have quite a number of forums that we have planned as AMFI to working with the government so that this can be actioned. And we hope the CS will help us to drive this
mm-hmm.
sector. Yes.
Now, MFIs, they have quite some competition, especially in this market that we are in. The digital credit lenders are one of the biggest competitors for MFIs. What is the industry doing to catch up with these various new lenders, so to say, and also to prepare for the future?
Yeah, thank you. Now, the competitors are many,
yeah.
And don't forget mm-hmm. the digital players are also microfinance.
Okay.
So they are also part of us. Mm-hmm. They are actually our partners. So the challenges they are facing are still the same challenges that we are facing.
Right.
Now, one of the competition that we have is commercial banks. Commercial banks have actually now come into our sector. Remember, in the beginning, I told you we work with the informal sector, and most of them mm-hmm. Are considered as unbankable. Now, most of the commercial banks have realized that they can also share with us some of these clients. So that is a competition that we have to work with, and they have actually altered the way microfinance should work, because microfinance was working in a certain way. But because of the because of them coming into our sector, we are now trying to work differently. Mm-hmm. So commercial bank is a competitor. However, we are able to go around it in that sector, for that competition. We are able to go around because we are able to also assure our clients that we are still the best. because we do not accept what we normally call collaterals. Yeah, an asset, because we work with people who do not have assets. So how do we do it? We take chattel. Chattel is like your stock. Yeah, the hardware. So we look at the stock in the hardware, and we value it, and we give loans based on that. That is a way of beating the commercial banks, because commercial banks cannot do that. The other thing is that we also take households as collateral. This is for not everyone. This is for clients that we know, we have a history with them, and they have been faithful with us, so we work with them in that manner, so that we can be able to beat the competition. The other thing is about the digital competition. Digital competition, we are in it also. To overcome that challenge, we have also involved ourselves in the digital platform. I don't think now there is any institution that can do without the digital platform. It is almost impossible, because right now, if you don't do that, then you'll be phased out without realizing that you have been phased out. So we have also come up with ways of doing the digital loans. So we are doing digital loans and all that to be able to work with them and to beat that competition.
Right, so definitely it has been a good thing. It is a positive thing.
It's a positive thing. It has challenged us, and we are working with it. Yes.
Right. The high interest rates that you charge, as you said, it's because of how intensive it is to run a microfinance.
Yes.
Does that discourage clientele from coming to you? And if so, is there any way that these interest rates can come lower?
The discouragement of clients, they are not discouraged because in the first place, they cannot be given loans on the other side. The commercial banks cannot give them loans because of what, they are considered as unbankable. They are considered as high-risk clients. So, and because we are able to take them, that margin of interest is what now compensates with the risk that is there. Yes. So we cannot say that we don't have clients. We don't have. We cannot say that the risk. The margin, or rather the high cost of loans, affects our clients as much, because they don't have also an alternative. And also, it's not our liking to overcharge them. It is the way the business is structured. Yes.
Right. Remember, we are talking about matters microfinance in Kenya, how the industry is performing, how to ensure sustainability in the industry. We shall be coming back to you with this conversation. You can interact with us on Twitter at KBC Channel 1, and at Betty Kiptum is my personal handle. Let's take a quick break. When we come back, more on this conversation. Stay with us.